JP Morgan just quite literally confirmed the Moass, and I already know what you guys are thinking. You clicked on the title of this video because you want to see, is this clickbait? Is this not clickbait? We're going to go over exactly what they said, and what they said is crazy. I would never expect JP Morgan to say this, but they did, and I do think this is something that the ape community should be well aware about. I know the list of conviction sheets, right, per se, for lack of a better analogy, is through the roof. We have all the conviction we need, but to add something else on top of that is big. And the fact that a very well-known and very well-liked analyst for JP Morgan is saying this leads to more credibility with other investors. And that's really what we want, is as much money as possible flowing into AMC. We want the short hedge funds going against the long hedge funds. Who cares who is buying the stock? I want hedge funds to buy the stock. You can have the hedge funds that are shorting the stock. We need hedge funds as well to buy the stock, like we seen in June with the biggest month of inflows to AMC. I think that is going to happen again. So let's dive into all of this key information. Hit the like button for me if you are buying AMC, if you are excited about what we've seen on Friday. Let me know that information. Best way to do that is by hitting the like button as well as subscribing to the channel and commenting down below. Doing all three of those things help push this video out to as many people as possible. And this is some information that apes should be very, very excited about. Now, before we get straight into all of the key information, I just want to point out that yes, I know last week there's no other way to put it, I perfectly called out what we would see with AMC this last week. I was making videos on Saturday and Sunday of last week saying we would have a beginning of the week sell-off and then we would see an end of the week rally. And what I want to say to that is, while it's great to be spot on right, one of the only people, if not the only person on YouTube to exactly call this out, this is not to say it will always happen like that. It's very important for people to take in this information and come to their own conclusions, specifically with a very manipulated stock like AMC. All I strive to do here on this channel is to read the information, see what the information is telling me, and then to relay that information back to you guys in the most precise way possible. So congratulations to everybody that is subscribed to this channel that did make a lot of money based off of what I was saying. And I do hope that I am right in the last video that I made saying that this is the first leg to the AMC Moass. And that's also what we're going to go over here in this video, is some data behind why I am saying that. Because like I said, I take in the data and interpret that and portray it back to you guys. So let's talk about it, guys. AMC on Friday up 19.10%, and after hours up 0.82%. An incredible day. I didn't see a bounce like this coming, but I knew it was going to be very significant, as we did see a lot of puts in the money, a lot of calls out of the money. What does that mean? If we see a slight bounce on Thursday or Friday, like I was saying, there's no days left to expiration, especially on Friday. All those contracts have to be hedged for that day. That's exactly what we've seen. The bounce just kept bouncing higher throughout the whole entire day. We almost closed at our intraday highs. Our intraday highs were up about 24%. This was an incredible move. We're likely to see this continuing on Monday. We also have some other catalysts next week that we will be going over in another video, and that will be very important for you guys to fully pay attention to, because all of this information is really going to tie in together. But to go over all that information, I would have to make a half an hour, 45-minute long video, and I just don't want to do that to you guys. So let's take a look at what this person at JP Morgan just said. This article says, short squeeze likely into end of the year, JP Morgan's Kolanovic. Small caps, IWM, and value stocks, IWN, are in a correction in the past 4 weeks, while high beta stocks are entering a bear market, JP Morgan's chief global market strategist says. This is JP Morgan's chief global market strategist. This is a top player at JP Morgan. And we don't like JP Morgan. We don't like banks. We don't like what they have been doing to us. That's very well known, and that is very well obvious. That is not the point I am getting across here in this video. I hate them just as much as you hate them or the next guy. What this is going to do, like I said, is create other hedge funds and really put it in their minds that, hey, if they're saying this, then we should probably follow along, and we should definitely start buying some of these stocks that are most prone to seeing short squeezes. And I think it's no question AMC would be the top candidate hedge funds would be looking into. This is very key though. Small caps, IWM, and the value stocks are in correction mode, right? That's an over 20% drop. If we take a look at IWM, what do we know about IWM? This is the ETF for the Russell 2000. AMC is the top holding in the Russell 2000. So if you put $100 or into IWM or shorted $100 worth of IWM, the highest percentage, that is definitely not the right way to say that, but the highest percentage of that $100, whether it's buying or shorting IWM, is going to go into buying or shorting AMC. On the Ortex data, we're looking at an estimated short interest, or the amount of shares that are sold short of IWM, 143.18 million shares. I don't have this pulled up, but the IWM share count is 310 million shares. That means the short interest is almost 50% of IWM. And IWM, like I just said, is mainly concentrated in AMC, or that's the highest allocation of IWM. So that means IWM has to go out and short AMC on the marketplace to account for all the shorting that is happening with IWM. But that shorting to AMC is not reported in the same way. It's not reflected in the Ortex data the way that it should be. With AMC short interest at 20.33%, while this is still high, there's a lot of synthetic short positions that are outstanding on AMC that will have to be covered via IWM. But let's continue on to exactly what JP Morgan's chief global market strategist is saying. Marko Kolanovic is his name. He says, who has gained attention for recent calls to buy the dip, calls attention to a paradox with US stocks, on average down 28% from highs, with the median stock down about 21%, while the Russell 3000 IWV up about 22% year to date, and the S&P up 25%. In quote, such a divergence is unknown to us and indicates a historically unprecedented overshoot in selling smaller, more volatile, typically value and cyclical stocks in the last 4 weeks, Kolanovic writes in a note. He's essentially saying that these short sellers are getting extremely greedy and shorting all of these mid-cap stocks. All small cap stocks are getting shorted into the ground. And we already know that's happening. Take a look at another company that is a small cap stock that only has about a $2 billion market cap, Corsair Gaming, 32.37% short interest. This stock has an 8 times forward PE, price to sales ratio. That means the stock is significantly under its book value. There is no reason to be shorting this stock. And especially now, after it's down 50%, it doesn't logically make sense. We're setting up for major short squeezes across the board, and AMC is the prime candidate. He goes on to say in quotes, for short selling campaigns to succeed, there has to be positioning, liquidity, and often systemic amplifiers for the sell-off, he says. This is very key, and this is really the biggest point that I wanted to point out for you guys throughout this entire video. He says, often systemic amplifiers of the sell-off. What does this mean? This essentially means is you can't have one or even a couple small-term, short-term catalysts come and go and expect these stocks to stay down and not get short squeezed. He's saying that you need longer-term bear catalysts, or catalysts that will have a long-term impact to how you value these companies to see this strategy pay off. And that's not what we're seeing. The Fed meeting came and went. We know what to expect. The markets overall have pretty much stayed flat, or at least rallied off of this. As well as that, guys, Omicron, not going to be a big situation, a nothing situation, essentially. And the debt ceiling just got raised. So all of the fear catalysts essentially are off of the table. Unless Omicron develops into something much worse, he's basically saying these stocks, they're going to bounce hard and you're going to see major short squeezes. He goes on to say in quotes, we believe these conditions are not met, and hence this market episode may end up in a short squeeze and cyclical rally into year end and January. Let's repeat what happened in January. AMC went up 10x. That would be great to see. Certainly not to the extent of the Moass, but I don't think any of us would argue at the current moment with seeing a 10x increase in AMC's share price. Now, retail resilience. There will be buying up equities into month and quarter end, he adds, calling out the retail investors, saying, in short, in my interpretation, don't fuck with retail investors. You're shorting all of retail investors' favorite stocks and expecting nothing to happen to you. That's just ignorant in my personal opinion, and that's just uncalled for. In quotes, yet there is aggressive shorting, likely in a hope of decline in retail equity position and cryptocurrency holdings, while in fact, both of these markets and retail investors have shown resilience in the past weeks. And big fucking congratulations to all of you guys. We're showing up the hedge funds. And I take a lot of passion in this because I've been in the market for a very long time. I've seen retail investors come into this market, and I'm not seeing any signs of them slowing down. So big congratulations to all you guys. On a side note here, for changing your family tree. If you guys grew up in struggle and you are here watching this channel just like I did, and you know the passion that I found for the stock market, you're going to change your family tree. You're going to change you, your kids, your grandkids, your great grandkids' future forever. Partly with AMC, partly what you do. Why can't I talk? What you do after AMC. Let's continue on. In quotes, one should note that large short positions likely need to be closed before the seasonally strong January, which is likely to see a small cap value and cyclical rally, Klonovic says. And given the market liquidity is dwindling, the impact of closing shorts may be bigger than the impact of opening them when liquidity conditions were better. All of this, huge news. Huge news for AMC holders. And like I said, that's the main point I'm trying to drive across to you guys. It's not really exactly what he's saying, even though he is a very well-liked and very well-known analyst for JP Morgan. I mean, for Christ's sake, he's the chief global market strategist. He's the top guy at JP Morgan that is saying this. People look up to JP Morgan, or I should say people, hedge funds, and they are likely to get along the same lines as what he's saying as far as buy these stocks. And AMC is still down substantially from where it just was in early December. So on top of all of the other data that we are going to go over here in this video and later on videos today, I think this is more confirmation for the AMC Moass. And I might get a little greedy. I might buy an option or two just because I think this thing is going to shoot through the moon. Might buy a $40, $50 call. Who knows? I'll let you guys know in the buy and sell alerts if you guys want notified on that information as soon as I buy or sell a stock. Check out the pinned comment down below in the description. Yes, no, I don't buy options on AMC. Yes, I only buy shares. But when you're looking at an opportunity like this, and like I've said many times, once the Moass starts or we're getting bullish momentum, it's not a bad idea to buy a call or two for your own personal gain, as well as it does help the movement, because that's leverage. If it goes close to into the money or into the money for that one contract, you could potentially force the market makers to buy 100 shares of stock. So I think it goes without saying. Like I've said many times, it's not a bad idea to do once you see that bullish trajectory. You don't want to buy calls on the way down. That's not helping nothing. That's providing liquidity to the market makers. But that's really a side note for a different video. But let's briefly go over AMC short interest. If you guys didn't catch what I said earlier, short interest at 20.33%. These are only the estimated shares that are sold short of 104.33 million. We know, like we went over, IWM synthetic short positions are not going to be reflected in this Ortex data. So including the hedge funds that use the option chain to make it look like they've covered and to report to their brokers that they've actually covered on their short positions, when in all reality they have not. My consensus on this stays the same. The short interest is in between 40 and 80%. On the low end, what I think is going to be reported to us is on the low end, 20% short interest. On the high end, about 25% short interest. They never want to lead us on and give us that clear indication that they are balls to the wall short in AMC. So I don't expect crazy numbers, but in between 20 and 25% to come out. Now, days to cover. This is key, and I hope you guys made it to this section of the video. And we'll go over this in other videos as well throughout the rest of, the weekend and next week, because this is key. And there is a direct correlation between high days to cover heading into low days to cover and the price action of the stock. Essentially, what I mean is this is a leading indicator that I'm going to be watching very closely to see if we are going to get continued legs up into the Moass. Take a look at January. Days to cover at about 2.3 days to cover. And that was obviously before we seen the January rally. As soon as the January January rally happened and we peaked, we fall all the way down to 0.62 days to cover, straight down. So there's a direct in correlation, right? Discorrelation that goes on. Days to cover falls, stock goes up. Once a days to cover does go up, the stock goes down, and vice versa. They discorrelate each other. So that's exactly what we've seen. Days to cover hit that low at 0.38 days to cover as volume had stayed consecutively high since the run up in January all the way to about mid-February, right? Now, we've seen the days to cover shoot back up to about 1.72 days to cover right before the June rally. Days to cover fell substantially, down to about 0.5 days to cover, stayed down here until the end of August when we did slowly start to make our way back up to these extremely high levels. Now we are at all-time high days to cover, or at least all-time highs in the past year of days to cover at 2.54 days to cover. We've seen the bounce in AMC. We see the curl down. Let's see if I can zoom in. I'm not exactly sure if I will be able to zoom in right now, but see, yeah, no, I can't zoom in here on Ortex, but we can see the direct correlation of exactly what is going on. We're seeing days to cover actually coming down. I might have to refresh the page because I lost what was actually going on. But you can see this direct correlation with days to cover going down and the stock going up. So if we see another major downturn to the days to cover, then we will see another major rally for AMC stock. And considering all of this information that we have went over here in this video, I think it's pretty safe to say the Moass is closer than ever. I know you guys have heard that. I know that's pretty cliche to say at this point, but that's in my heart and soul. That's what I believe. So stay tuned to this channel for these videos that are going to come out today and tomorrow. Price action, price prediction, all of that. That's going to be very key. And I hope you guys honestly, truly, hope you guys make a lot of money. I hope you guys find value out of these videos. As always, I'm not a financial advisor. I'm not a financial planner. There's always a chance I am wrong. As always, that goes without saying. Hit the like button for me. Consider subscribing to the channel as well as comment down below if you guys found value out of this video. I surely hope you did. Share this video if you found value with your 8 friends, your 8 buddies to help push this information out. Love and appreciate you guys. Thanks for watching this video. Check out the link down below in the description for the buy and sell alerts, as well as go ahead follow me over on Twitter. Been posting regularly over there every single day. So if you guys want to be notified of all tweets that come out, any of that kind of stuff, sometimes I play around over there, check that out. Free 99 buy and sell alerts, as well as the link for public down below in the description of this video. You will get up to $1,000 in free stock. It only takes about 2 or 3 minutes to sign up and receive that free stock. And the best part about public, they do not use payment for order flow whatsoever. You also get a 30% better fill on your stock orders than you do on Robinhood. That goes without saying. That's definitely a brokerage to sign up for. I get a free share in all transparency in between, $3 and $1,000. So do you as well, and they earn a customer. So it's a win-win for everybody involved. If you guys are not signed up with them, highly recommend you guys do that, as well as Webull. If you guys want to get a chance to get a free share of Apple, I think it's like 1 in 50 chance to get a free share of Apple before Christmas. Check that out as well. Link down below in the description. Like I said, love and appreciate you guys. Thank you for watching this video. I will see you in the next one.